The word of the day to describe the market seems to be rudderless. Romaine mentioned it. Abigail mentioned it. We've been talking about how the equity market, at least, is a one-issue market, and that's trade. There are headlines on trade, but it's not moving the market very much these days. Why is that?
Today is a great example of the fact that the markets have become fairly numb to the noise. You heard reports earlier today that from China that perhaps the United States would actually push out the December 15th tariffs. And really what the market action is showing today is the markets just don't believe it. And I think one way we like to think of it is that if he didn't tweet it, then don't believe it. The markets, I think, have kind of taken pause. They're holding back. I think that one of the things we do have concerns about, and because we really have had a lot of noise over the last year with this trade on, trade off, risk on markets, and a lot of this has been considered noise, but the December 15th deadline, that's not noise. That's something that's very significant. It's something that investors really should watch. We probably could have some more volatility until we get some resolution on that because of the fact that everything we've seen thus far with respect to the trade war has really left the U.S. consumer insulated. And that consumer has been the pillar holding up the U.S. and really the global economy. And there is some concern because these are the tariffs that we're waiting on this weekend that they do hit the consumer where it counts. It's laptops, it's sneakers, it's iPhones. And so there definitely is some concern that the markets haven't really priced in these tariffs going up on the 15th. And this is the type of move that really could be a little bit like the crucial Jenga block in the tower.
All right. Well, Burns, I mean, we're going to hear from Powell Jay Powell on Wednesday. Yep. And of course, I assume some of these issues and questions are going to be posed to him. When we hear from the FOMC, from the statement, and then, of course, from Powell himself at the news conference, do you expect them to sort of reiterate this idea that the economic data we've gotten so far and the economic forecasts that we have looking out are still in line with previous FOMC statements?
Definitely. All the data that we've seen since the last Fed meeting back in October has really just been exactly in line with what they've suggested. And so, we don't, in fact, I think, really no one expects the Fed to move on rates. Probably the one thing that people will be looking at most closely is to see, look at the dot chart, look at the forward forecast from the Fed governors. And it's probably expected that they will push it back, according to those dot plots, any coming next hike until probably out of 2020 into 2021. And so, the Fed it's really just a way of just confirming the Fed's plans to stay lower for longer on rates and to stay really fairly accommodative to both the economy as well as to the stock market.
So the FOMC decision and news conference is tomorrow. And then on Thursday, of course, we have the UK elections. Will that have any kind of spillover effect into U.S. equities and how you might think about, or how investors might think about positioning when it comes to risk for the rest of this year?
Yeah, I think that this really is, as far as the geopolitical concerns go, a week just chock full of landmines. Whether it's the FOMC meeting, the election in the UK, and then later this week the December 15th trade deadline are all factors that I think the markets have generally not priced in any bad news, and so these are all just speed bumps. So that as you get through each of these, you might get a little bit of resolution. If you have an outcome in the UK that doesn't surprise investors, it's looking more and more like that Boris Johnson's party should end up eking out a victory. If that's the case, then you might see a small market move, and likewise a move to maybe a little bit of a steepening of the U.S. yield curve, which would probably be good for cyclicals and good for value stocks. But really, I think that these are all substantial events, but the U.S.-China trade negotiations, I think, you guys said it best. You said it really has been trading like a one-issue market, and that's the one that investors really should keep their eyes on that ball.
So, Burns, real quickly, when you look at the global growth story into 2020, do you expect to see a little bit more synchronization in growth, or is it still going to be U.S. outperforming the world?
Yeah, as far as economic growth goes, U.S. economic growth looks like it should be slowing a bit next year. You're lapping some of the stimulus that we've got from 2017 and 2018. You're rolling some of that off. To the extent that we don't get any real resolution on trade, and even if we do get a phase one deal, that's not necessarily really going to tackle any of the substantial issues. And so to the degree that we don't remove that uncertainty tax, then corporate capital spending has been limited, and that's really acting to sort of bring in U.S. economic growth from the 3% rate that we had last year to maybe closer to the 2% rut that we've been stuck in for most of this decade. And so that probably, for all intents and purposes, does lead to a bit more synchronization between the U.S. kind of tapering in a little bit and perhaps global growth elsewhere in the emerging markets and the rest of the developed world, maybe showing signs of bottoming and picking up just a little bit.